afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by Marc Sperling. Welcome, Marc.
Hey, Brittany.
Ready to tackle these live viewer questions?
I will try.
All right, let's open it up with one from Ben C. Banks, who says, basically, what do you do in this market? Do you go long against the 50-day moving average or short because of the weakness shown today?
I think you got to respect what is actually happening the last few days, the last few weeks, and it's definitely showing some serious weakness. This morning we got the gap up and moved the oscillator down to almost flat. We rolled over again. We really cannot hold a rally. To me, it seems like we're going lower, but understandably, 4 or 5, 6 days down in a market, in a stock, it's not my game. I'll let them keep going down until I find a capitulation level. But if you're a bear and you're a shorter, you've been probably licking your lips sitting on the sidelines for a period of time. This is your market a little bit more. I'm taking a much quicker approach to my trading, which means I'm just taking some cash flow and moving and grooving ideally.
Okay, so is that essentially what you would tell P4P here, who's saying, how do you maneuver in these markets while not being able to get in and out intraday due to pattern day trader rule?
A correction's in the works. That's not open for debate. What's open for debate is how far we go before we find a little bit of a bottom, a little bit of stability. Is it before the end of the year, before the election? Is it January 2013? I don't think we know the answer to that yet. Best in breed, still holding up a little bit. Google still holding up. Obviously, the other best in breed not holding up at all from a tech point of view, Apple. That's hence why I think we're just seeing the weakness. If Apple shows any sort of strength, I think you get strength across the board. That's just how it goes, as Apple goes, as the market goes. Banks are showing strength. So overall, I would be dipping my foot maybe in the next few days if we get a little lower. Certainly from a longer term perspective, I think you got to buy on dips. That's how you have to look at it. You can't buy, every time we get to 1380, 1390, 1400 level. You got to buy at the 1320s, 1300s. Much better, risk versus reward scenarios for the longer term if you're not looking from an intraday point of view.
Well, you mentioned the magic name there, Apple. We have a lot of questions about it. So being as you brought it up, we have one from Evan English saying, first, do you think Apple will test the 200-day?
It's not going to do it before earnings, if that's the case. I don't think it touches it before earnings. But after earnings, I think all bets are off. If it does not do what Apple normally does, which is beat expectations by a lot and exceed on all revenues on all fronts, then yes, it probably will touch the 200-day. That, to me, will be the buying opportunity you look for to get involved, if that is the case. Right now, I think it cannot hold a bid. Closed at a new low, below the 630 level, which again, not good. Next level, 620, and then I think on the weekly chart there's something else. Let me see. No, we're really right at the 21-day on the weekly is 626. So 600 is the next line of support if we really get below this level. So right now, it's not really a buy. I mean, the buys are where you're renting shorts and owning on the long side, sort of renting on the long side, and you can sort of stay with the short for the time being, or so it seems, at least right now.
Okay, JMac Trading had actually asked also if the next stop for Apple was 600 or 660.
I wish I had the magic 8-ball. Magic 8-ball, what is it? I don't really know. Technically, it's telling me it cannot hold a bid, at least for today and the next few days. We'll know a little bit more, obviously, if it can regain 640, 645, regain some composure, possibly regain its 8-day moving average. Then maybe it works its way back up to the 660, 670 range. But right now, technically, on almost all time frames, it does not look good from a buying opportunity. But that being said, it is Apple. It is best in breed. You tend to, the guys who get paid on this will be buying it on the pullbacks into this dip, probably with both hands at some point in time.
Jetson noted that tech is weak and materials have been strong this week. He says, do you think we're seeing rotation in materials from tech as people predict that China is bottoming?
I don't know if anybody's predicting China is bottoming, but sounds good based on what you're saying. I think one of the keys is, knowing that we have the election, you want to put some economic news into what is happening. Taxes, tax selling, possible difference in tax rate for capital gains. That could be why some of these high beta stocks that quite frankly have had huge gains for the year. Financial advisors and others are telling their clients to possibly sell, take some trades, wait and see what the tax brackets become, and then you go from there. That could be, and then obviously these other refiners or whatnot, they don't have the gains that everything else, all the high beta stocks have. So no tax, no capital gains, so you don't have to worry about it. So they're just rotation, and that's what we have to look for. That's our job, really. Keep rotating, keep moving your feet in this tape.
All right, here's one from HL Stock. He says, hi, Mark. For a swing trade, what criteria should a stock have for you to consider it an A trade?
Well, it depends on if it's on the long or short side. So most likely for me, if it's, my swing trades are 80% on the long side, I will rent the short side. I like to see at least my weekly, daily, and hourly looking okay. Trending up, trading a bit above key moving averages, which is at least at minimum 50, 21 day. But ideally, I love to see a trade, it has to trade above the 200 day. And it has to have a good, solid pattern that I weigh good risk versus reward scenarios. For right now, if you want to look at Apple, even Google for that matter, it's not great patterns in the sense of, risk versus reward is not necessarily my favorite, but at the same time, Google's still best in breed. Apple, if it gets close to 600, maybe that's the time, and it can base there above 600 for a period of time, and then work itself higher. That to me would be the telltale sign. But across the board, I like to see nice solid bases and moving averages moving to the upside.
Okay, here's one from Aloha Trader who says, when you were playing your TLT short this past week, was there a reason you chose that over going TBT long? Seems like they move in opposite directions.
That is the point. They do move in opposite directions. So no, really just what you get bang for the buck for. If the 20-year money flows out of there, TLTs will move down, TBTs will move up. Money gets, people are buying them, TLTs will go up, TBTs should go down. It's just an inverse relationship. It's just an ETF. Depends which way you want to really go. I know it's weird for me to tend to lean to the short side on anything, but it was just a little more bang for the buck, triple the price, double the price. So it just moves a little bit more to my liking.
Okay, here's some different names. We have one from Venki saying WY and GNC holding steady. Thoughts on these?
WY Weyerhaeuser looks good. Looks good. It's trading a key moving averages. It's certainly not a market stock, but as long as it holds the 21-day moving average, I think you're in good shape. Probably a move above 27 will probably be a trigger to a new buy. And you go from there, and let's put up the weekly just so we can see what I'm looking for. Nice consolidation, good-looking chart, very good-looking chart. What was the other one? GNC?
Yes.
GNC, the vitamin. Not as pretty, but it's still at the top third of its trading range, still trading above key moving averages. It's fine. I think it needs a little bit longer of a base. Let's look at the weekly again. Nice base, using probably 38 as a level that it should hold, and that will be the 21-day roughly on the weekly.
Okay, well, while we're throwing out names here, Jane asks what you think of CHK and TICC. Let's start with CHK.
CHK. CHK looks, Chesapeake looks good. Looking like it's trying to find a little bit of a breakout level. Obviously, the first line of defense is 2090. That would be the 200-day moving average. So we'll have to see. Volume was decent today. Certainly not a barn burner, but something that should be kept on the radar, using 19 probably as a stop. What was the other one?
TICC.
TICC. Trending down, or obviously moving up, trending down on relatively light volume. Try to stop, I think probably 970, the 200-day should be the stop. So anywhere around 10 to 970, I think is the safe place to buy. Bases above 10 for a little longer, probably it's the chance to get involved if that's what you want to do. I don't think it's a short, not at this point.
Okay, we've gotten a few about Las Vegas Sands. Aloha Trader says LVS failed its uptrend or bounced off the 50-day moving average. What do you look for to decide? And Web Miztra says, hey, Sperls, sir, think LVS is finally reversing here?
Reversing to the up or downside. To me, it still looks like, it obviously had a little bit of a move. I think the jury's still out, but overall, it actually looks a little more bearish to me than on the bullish side. And most likely, the next time it tries to move up or again above 45, 45.20, will probably hit some resistance. Might be an opportunity minimum if you are long to take some trades, and possibly an opportunity to put, depending on where we are in market conditions, to put on some new shorts. We'll have to wait and see.
Okay. We have questions about your strategy also here. Eleanor Rigby saying, hey, Sperls, how do you determine an intraday reversal using a 5-minute chart, crossover of the 8 and 21 EMA with heavy volume? Very specific here. Please explain your strategy.
Eleanor Rigby, isn't it a song? Eleanor Rigby. Dun, 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 dun,
A little louder,
dun,
we can't hear.
No singing. Anybody on the VTF knows my singing is horrible. I do apologize. Do you have a specific stock that we can actually look at for that? If not,
we were not given
the key is when they do cross, which way do they cross? If they cross to the upside, then obviously most likely that's a much more bullish pattern. If they cross and the pattern is moving to the downside, it's a bearish signal. And we have LVS, and you can see that 8 and 21 are crossing right now to the downside. Hence, to me, that is much more of a bearish signal than a bullish signal. So see which way the actual chart in itself is living, whether it's on the upside or the downside, and when they do cross, which way are the moving averages falling. If they are sort of trending down and the actual chart is trading below, stock is trading below the moving averages, then most likely it's much more of a shorting opportunity and bearish in nature.
Okay, Mike here says, what rules do you have for holding stocks during earnings season? I had CVX thinking earnings was in November and was caught off guard.
Well, the one thing you have to worry about with earnings is pre-announcements. That's just the nature of the beast. 2-3 weeks before earnings, you get pre-announcements. All year long, you can get pre-announcements, so you really don't know. Rule of thumb, I don't normally hold a whole lot into earnings. I know a stock that is coming out. Sometimes you get caught, holding a cookie jar, but that's part of the game. Overall, though, if I know it's coming out with earnings, I'm going to be relatively flat. Maybe it will be an options trade, so I can at least manage my risk. But most likely, I will not be long or short.
Okay. Fernando says financials have been holding well, but at this point, is going long financials here wise, or is it a trap?
Well, let's see tomorrow. Tomorrow is going to be the beginning of the tell. JP Morgan comes out tomorrow morning. WFC comes out tomorrow morning. Technically, they look good. That can all change with earnings, folks. Wait at this point in time. It's, hopefully you're not too big. If you're already in positions, then you're going to have to wait anyway. But, the technicals will tell us, and the action tomorrow will really dictate which way. If the financials can't hold up, this market's rolling over probably a lot harder than it has been, and the speed will probably increase.
All right, Market Picker says Sperls Duncan has been holding up decently during this market pullback. A little choppy, but thoughts on the 31.50, 32 level?
I like their donuts. I like their coffee. Dunkin' Donuts. It looks good. It's obviously a relatively new issue. A new stock out there. Still trying to find its range. Still trying to find its levels. I think above 31.50, probably a little bit of a buy to 34. But again, are we in the tape that you just want to, buy new levels and hold it that long? I'm not so sure. If we resume an uptrend, possibly overall, but it looks good. Using 29, probably 50 as a stop.
All right, we're going to give Marc a little break here. We're going to take a quick commercial break. We'll be right back and joined by Evan Lazarus, so keep the questions coming.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live, this time joined by Mr. Evan Lazarus. Hey, Laz, welcome.
What's happening? Thanks for having me.
Of course, anytime. Let's jump right into it with one from Real Images, who says, hey, what's the outlook for the GLD and GDX with money moving into the XME?
All right, well, let's talk about GLD. You know, gold's a tough trade. You know, I have from time to time traded gold. As an active trader, I don't find a whole lot of success in it. Now, that being said, if you have longer term time horizons, it's a much different vehicle. For those that are in the shorter, you know, time frames, the day traders, the swing traders, it's definitely a little more of an overnight trade. You don't really generally see in the GLDs a lot of enthusiasm intraday. Generally, you get this 1, 5, 10-minute move each and every day, but I don't recommend them as short-term vehicles, really longer-term time horizons. So with that said, you know, with gold, let's look at the weekly, because the weekly does tell the story. It's where we get our clarity, it's where we can find our best levels, and it does really give you an overall picture. We've obviously had a nice move in gold over the last, 5, 6, 7 weeks. It's had a nice move. We're back into resistance. We can see the resistance up here in the GLD. So, I suspect that if we're going to leg through this and break higher, which all signs to me point to we do go higher in gold. I do think we either have a minor pullback or we continue to base here for maybe 3, 4, a few more weeks. A nice base under resistance. We break above that base. You could see higher prices in gold. So definitely a trade to watch. I wouldn't go chasing. Like I said, it's had a nice move in the last 2 months. GLDs have acted very, very well and have continued to hold in here. So there's still money flow. But I think it needs a little more time to develop. As far as the miners go and the GDX, I'll bring that up as well. It's the same basic structure, but I think that there's more money to be made in trading the precious metal and the GLDs than there are in the miners. I think the miners are a much more difficult trade. That's, again, just an opinion, one man's opinion. So if I'm looking there for a trade, I am looking at GLD. I do want to see it base for a little bit longer. Again, go back to that weekly, go to the GLDs. Stay in tune with this level. Stay in tune with this upper band of resistance. Watch the price action over the next couple of weeks. We do want to see a heavy volume breakout. A good volume breakout above that resistance level there could prove to be a very, very profitable opportunity. But like I said, a little more time wouldn't hurt either.
And we just talked about Dunkin' Donuts with Marc before, as it's been holding up decently well during the pullback here. And Distant Light has a question not just about Dunkin', but also for American Express. He says these two stocks both appear to be holding up well during the recent pullback. What are your thoughts?
Well, what makes a market? It makes a market is two different opinions. Marc and I, from time to time, will disagree on certain stocks, and we will agree. As with any good trader, you see it the way you want to see it. It's all about risk. If two people, if let's say Marc and I don't see eye to eye, or me and Scott, or Marc or whoever, then maybe it says, hey, maybe this isn't a trade that I want to be in because there's conflicting opinions. As far as Dunkin' goes, let's go back to that chart. And Marc was right, and he said that the stock's relatively a new issue. It's a little less than a year old. But as far as the pattern goes here, and again, this is a weekly chart. I'm giving you sort of the overall 1 year look at what the stock has done. You can see highs, you can see lows. We're sort of in the middle of the trading range. If you look at where the IPO was, which was right about here, we're holding that IPO price, that $28 IPO where it came to market. But is this a great looking pattern? No, it's not a great looking pattern. It doesn't really have much of a trend. It's not uptrending, it's not downtrending. It's just sort of holding a level and basing. Above the, I guess, 3150 level, yes, there are going to be a lot of eyeballs looking for this, breakout type trade. Does it rally back to prior highs? I think at this point it's too hard to say. But if it does, let's go to the daily. I'd like to see it get above that 3150 level, stay above there, build a nice bullish pattern, have these shorter term MAs start to begin to trend higher. That would be the signs that this stock is ready possibly to, engage. Time to make the donuts, I guess. That's my opinion there. It's not a great looking setup, but for an active shorter term trader above that 3150 level with volume, again, volume's the catalyst. You want to see a good volume breakout. There could be a nice trade there. So something definitely to watch. In what is a weak tape, the stock is, trying to base and trying to break out here.
And what do you think about American Express? That was the other stock mentioned.
American Express, let's always start weekly. You start big and you go small. So we start big, a multi-month base, not really being influenced by the market. A month or two ago, while the market was making new highs, the stock wasn't making new highs. Market's making, starting to push to the downside. The stock's not pushing to the downside. So it's really sort of trapped in a very tight range. It's not market-centric. I would be remiss if I said it's a must-own, but I would be remiss if I said it's something that looks like it's about to break down. I think it'll be driven by earnings. Whenever American Express does report, I don't know the date off the top of my head, you'll probably see a gap up or a gap down that will take it into a new trading range, at which point we can reassess and look for opportunity there. At this point right here, yeah, the obvious trade is probably through 60. I think there's going to be some eyeballs, through this level. I still don't think it's the right play. You could make the argument that a little bit of an ascending triangle pattern building here, and that could give us a breakout to the upside. And that all could be well and true. I'm not saying it's not a buy through 60. Just I think with a grain of salt, maybe if you're going to take the trade, go a little bit smaller. Make sure you know when earnings are, as this could be a very earnings centric catalyst here to move this stock.
Okay, here's one for you from Jenny the Trader, who says, Laz, what is your favorite day trading pattern? We know Scott's favorite is Red Dog Reversal. What's yours?
Favorite. I don't have a favorite. I think that there are, as traders, everybody has their own unique set of skills. Marc would probably say one thing, I might say another thing, and Scott might say something completely different. If I'm looking at it, I prefer to trade from the short side. It's just a comfort level. I think others probably prefer to trade from the long side. Again, it's a comfort level. I like, if you look at a trade like, I'm going to go with the obvious. You look at a trade like, Apple today, that's my kind of trade. This is a stock that gives you a, 2 to 3 day move into a declining 8 EMA. Notice what happens into the 8. So it's really not about, the day trade. It's about picking and choosing your spots. And that's my kind of opportunity. I like to buy or short stocks as they bounce or decline into rising or declining averages. What do I mean? Well, just using this as an example of that type of trade, you find a stock that has a nice uptrend, like it did back here, buying these pullbacks into this 8, where you can see buyers stepping in, is always a preferential method, because you're stepping in. It's not about the direction, it's about the risk. You're stepping in at low risk places. You're using your short-term moving averages to help determine risk. It's not about long or short, it's about risk. So when you ask me my favorite day trading pattern, it's being able to step in and know my levels ahead of time. So if I know going into today that the 645 to 648 level, again, as an area in Apple, is an area that I have to pay attention to. Why? Because that's where my declining 8 is. Then it's a question of going down to your smaller time frames. Again, here's your 5-minute chart, and watching the price action at those levels. Stock opens at 648. I know that's the area of the 8 EMA on the daily, and then it begins to unwind as the day progresses. Right here is what we talked about earlier in a question with Marc, where your 5 and your 8 and your 21 EMA on the 5 cross. This is the bearish cross on the 5. That's when momentum kicks in to the trade. So that's really my favorite type of trade. But it all starts from knowing the areas on the daily. Trading stocks that have trend. Trend, as we define it, is rising or declining averages. You have a declining 8, you have a rising 8. Finding those types of trades are really the key for finding the successful day trades. So finding the great day trade really is a function of finding the great daily chart that's either trending higher, trending lower, and positioning yourself using it daily, and then doing time frame analysis, which is what we call it, and using some of your smaller time frames for best execution. How's
Marc,
that?
I think that's fantastic.
You feel like you're really getting it?
I'm getting it. Market Picker wants to know, Laz, he says, would you say this current market composure isn't really conducive from a swing trading perspective? Is it smarter to be more tactical?
I mean, I don't know if I agree with that. By definition, what is swing trading? Swing trading is, being able to use your daily charts and what we call the analytical time frames to find, a 1 to 5 day window of opportunity. At least that's how we generally look at it. If you go beyond that 5-day window, sometimes swing trades tend to become a little messy. So I think, it's still short in scope in terms of, just a couple of days, but long enough that you can really, take a nice chunk out of a trade. it depends on how you view things. I mean, for those that are looking for, sell setups, there's been more of that. Shorting's always, I think, a little bit tougher for people to get their hands around, not because the market's going down, it's because usually it's driven by speed. It's a more panic-oriented, faster-driven trade, so therefore it makes the trader a little more nervous. It makes them do more impulsive things. At least that's my perspective, and that's the way I see it. But stocks are still bouncing and then making new lows. Using this one as an example, again, go back to this chart, and again, this might be the extreme, but you took out a major level of support here, and again, this is more for education than anything else. You took out a major level of support, that was your first signal. But these little short-term 2-3 day bounces, they're getting sold. Just like back here, you had these little 2-3 day pullbacks, they were getting bought. So it's really the same type of trade, just the other direction. So it really depends on what you're looking at. I think it's a good swing trading environment. You just have to put yourself into the right situational trades. That's all.
All right, here's one from Mike B, who says TakeTwo and CRZO are keeping above a strong support zone. Can you analyze the price action? TakeTwo, if you want to start.
I can. Let's take a look at TakeTwo to start. And again, it's not a symbol that I look at all too actively, but I can give you my best shot on it. Okay, so here's a weekly of TakeTwo. This goes back 5, 6, 7 years, just to give you an overall. It's not a strong stock. It hasn't really rallied with the market. There's really not much going on here. You have, a nice level of support down here in I guess this would be $6, $7 maybe. Coming off a pretty swift decline here. Trying to catch, we call this a catch play on the weekly, where it pulls back into what is now a rising 8. This could produce one more trade up, possibly, see as high as maybe 12, 13. Do I think it's anything more than that? No, at this point, there's really not enough data here to support doing anything other than maybe trying to buy a breakout above this little, basing pattern it's had. If you can get above here, like I said, maybe you see a trade up to the $13, but that's really, if I'm looking at this from a fairly objective trading perspective, that would be my expectation. Nothing more than that. What was the other symbol?
CRZO, which he says is also keeping above a strong support zone.
Let's go weekly. Again, start big, go small. Basically a whole year of basing here. $30 resistance, $20 area support. Pretty much right here in the middle. I wouldn't touch it. I just wouldn't. If you're going to be a buyer, I'm a buyer on a breakout. If it's going to go lower, watch the pattern as it gets closer to breaking down. Right here in the middle of this base, there's better trades on the board. Good trading, swing trading. Again, not investing, but good active trading, which is really what we're about. Is about being in the right places at the right times. So when you look at your charts, you start big, you go small. The reason we start big and we go weekly is because it's going to give you a very, very good general overview of, hey, is this the place where money is flowing into? Is this the place where I know that it's the best use of my capital right now? Or should I just stay away and revisit at a later time and a later date? And that to me is kind of what's going on here. Revisit at a later time, later date. There's really not, you can't, I guess, you can't spin something terrible into gold. I'm trying to say it the nicest way possible. So when you look at a chart, and again, this is just rule of thumb, and when I educate, and we teach this in the active trading program, if it looks like a duck and it quacks like a duck, it's probably a duck. Stay away from it.
All right. Well, here's the last one for you today, Laz. Webmistress saying, Professor Laz, since you love to educate, what can you teach us about the manic depressive price action of SWHC?
SWHC. I don't know about manic. I mean, it's a gun company, so there's people buying guns. Well, I don't know what else to tell you. It's got a nice trend here. Again, start big. We'll start at the weekly. Pullbacks into rising averages are being bought. This is what I'm talking about, an example of money flow. If we were to visually take the candlesticks away here and all you saw were these averages, it would tell you a story. So pullbacks are being bought. It looks like the 21 here, you can see right here. That's kind of where money's being put to work. Maybe if you want to, put some money to work, wait for a pullback down to possibly $9. I think is a low risk entry. It's had a nice move from 2 to 10 percentage-wise. That's fantastic. And I continue to stay with the trade so long as it continues to make higher lows and higher highs. That's the key here. But I think you could probably step in at the $9 plus or minus area, for a low risk entry. If it were to take out a previous pivot low, which at this point would be right here at about $8, a little less, $7.50, excuse me, that's when you know that something has changed.
All right, Laz, thanks for joining us for a little bit.
It's been my pleasure.
All right, we're going to take another quick commercial break. We'll be right back with Marc again.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're answering your questions live, and we're back again with Mr. Marc Sperling. Welcome back, Marc.
Thank you.
Ready to tackle some more of these?
I am ready.
Got one from Aloha Trader saying for Home Depot, looked like it broke the uptrend, headed for the 50-day, down on big volume. Where in the last week might you have considered it a short?
Aloha, you have a lot of questions today.
I know.
Where would I have considered it a short? I guess you could have. Obviously, it's been on a nice trend. You can just see it's been respecting its 8-day moving average. Possibly the other day, probably 4 days ago, you saw the red bar. You saw a big bar to new highs, followed by a big bar, big red candle the other way, and then a gap down. That would probably be the only place I would even consider, if you're looking at short for cash flow reasons, a shot. Now, the question becomes if it actually can start living below the 8 and 21-day moving average, and it can basically rally up to maybe 60, hover, and then drops down. That's probably a better short candidate than a long candidate at this point in time. So jury's still out accordingly. Obviously, market conditions will sort of tell and dictate. But overall, it looks like the uptrend at least is not necessarily in jeopardy, but it could be. We need a little bit more time to really decide.
Okay, let's take a look at ECA. Jane says, do you think ECA is in a downtrend?
It's in a no trend. It's in a downtrend. No, I don't. I think it's just really, if you want to just draw lines, it's really in the top third of its trading range. And from that point of view, it seems like that's what I'm looking at. So to me, it's gone up from 17 early May. It's now hovering in the top third of its trading range. To me, that doesn't look terrible. But again, not that exciting. But every time around the 200-day, 2091, 21 probably looks to be a buying opportunity. Around 23 and change, probably a little bit of taking some off until it breaks out of this range. It's range bound in my opinion.
Okay, and we talked before about some of the focus turning back to the banks. We have one from Fernando saying, any thoughts on AIG?
AIG, everybody hated it for years. Now everybody loves it based on price earnings ratio. It's one of the cheapest stocks out there based on fundamental analysis. Looks good. You can't take anything away from it. I think it's still heavily shorted. It looks good. They're obviously paid. The government's not quite out of it, but it's been gradual over the last few years. And to me, it looks very, very good. Here's a weekly chart. It really doesn't give you the true indication of what it really can become if it actually breaks out of here. So it's something that has been on my radar, and certainly something that's viable on pullbacks. Right up here, it needs a lot more basing. It seems to fail around 35, 36 every single time. So try to get it in the next pullback if possible.
Okay, let's answer Market Picker here, who says Sperl's Groupon trying to start holding its 8 and 21 EMAs, resistance at 550. Does this chart look attractive whatsoever for a lower level trade?
Yes, but the problem is it's almost the same thing with RIM. These trades, they tend to get a downgrade or something happens, when they hover at the top end of the range for a little while, and that's the game that's played at this point in time. Downgrade. People are short, or people don't, aren't long enough. They can't cover it. Whatever it may be. Groupon looks good, consolidating. Probably 550 is the range. If it ever closes above 550, that's my trigger. You can probably get long with some confidence.
Okay. Here's one from LP saying ABBV is above the 8 and 21 EMA. Now, this isn't written completely clearly, but price level, I think they're saying what price level would you be looking to buy?
Probably closer to 21-day moving average. It did just pop above 37.50, which was the base. Probably roughly around 39, 38.50 would be my safe buy point. It should respect the 21-day moving average, at least for now.
Okay. Chorik saying, please review Bank of America and WLT. Let's start with BAC.
Bank of America, again, we can draw these channels. It's at the top third of its trading range every time around $9. Seems like there's support. Money's being put to work. Every time around $9.70, $9.65. Seems like some selling opportunities. Respect that. Know your ranges and trade accordingly. It looks good, like a lot of these banks. And here's the weekly chart. This thing, this stock can get up to the 1450 where it was back in late 2011. So it has some room. If the banks really want to go, they all have room. So just keep that in mind. Obviously, tomorrow will be a little bit of a tell, a little bit of a sneak peek on what we're in for overall.
Okay.
And WLT, right?
And WLT, Walter Energy.
Walter Energy. Resistance was 40. Does it get back up there? I have some options, so I hope so. We'll have to wait and see. It's definitely, it's done this before, though. So, I get a little skeptical that it's actually going to give you another rally that's going to last above 40. So at 40 is resistance. It's probably a place to take trades and not add. It is on the right side of the 8 and 21 day. I like that. The lower third of its trading range, I don't necessarily like that. Understanding it just rallied from 30 all the way to 40 in a week. Certainly a place to take profits. Needs to back and fill a little bit, in my opinion, before I would really get any more aggressive at the 40 level.
Okay, here's one from Prop Trader. What is the next momentum stock that will fly to 100 next year in this bull market? Will it be Coors?
Ask some guys on our chat, and I think the answer would be yes. It looks good. Obviously, a new issue. You can see what it's been doing. It's been respecting its 8-day moving average on the weekly chart. Certainly, the 21-day is starting to play catch up. I think it's something that we got to watch. It seems like a best in breed of the retailers. We saw what Under Armour has done. We saw what Lulu is capable of doing. It looks great. And yeah, I think it actually, I don't know if it's going to be 100, but it looks like if the market does get back, to some resilience, it looks like 75 is in the cards.
Okay, great. And while we're talking retailers, JCPenney. Derek saying, what do you think of JCPenney over the next week?
You should have asked me that yesterday. It looked good. Yeah, it looked okay yesterday. It obviously had a big day. It's a stock that's loved to, everybody loves to hate, at least in the last, year since Ron Johnson has come on board. Seems like some resistance around 28. Only buy at the lower end of its trading range. It needs to form a bit of a base. Maybe get some follow through in the next few days. Back to the 28 level. That would be a place to take trades. Then revisit in a little while after a little bit more consolidation.
Okay. Mickey Quebec saying, for your execution, do you use the VIX as an indicator? Example, if it accelerates on the upside, would you wait for your buy order?
It's a good indicator. It's been a little bit irrelevant. I don't think it's going to be as irrelevant over the next few weeks. Still, again, it's still trading at only 16, where is it at right now? We're going to close around 16. Yeah, 1580. Still below historical levels, so it's still trying to find a bottom at this point in time. We're definitely going to get more volatility in August. So if it is spiking and some of these stocks are going up, I do get a little nervous and I do get a little skeptical that a little bit more fear is getting put into the market. And it's an indicator I definitely look at. It's not the end-all be-all, but it's certainly something you have to notice. And especially as we move up a little bit, gets a little bit more relevance the higher it goes.
And Ken would like your thoughts on VRNG.
It's a stock that was $1 back in April. So from that point of view, it's $5. It's a great return. Needs to live around here probably for a little while, 4 to 5.50 in that area. Probably every time it gets to 4, look for an opportunity. I don't really know the story. It's something with the patents of Google. So there's some. I think it's Google or Apple, one of the two. I'm sorry. There's some relevance. It seems like there. We'll have to wait and see. It might be a news-driven stock, so one day it's either going to be up bigger if there's some resolution. I don't know when the court dates are. Do some research. Technically, it still looks okay, though.
Okay, one to hang on to at least. Here's one from Mike saying, I've experienced a stop that triggered with price pretty far away. How do you handle this?
I don't put in stops. That's how I handle it. Everybody doesn't agree with me on that. A lot of times stops are searched out, and it happens. It seems like they always find your stops. I just don't put them in. I put them mentally in, but I don't put them in physically. So.
What is your reason for that?
Because of that. Because of the reason that they'll fill it for 1 second, and instantly right after that it goes right back up or it goes right back down, depending on what direction you're looking at. That's part of the reason. Now, if I'm obviously passive and I'm not looking at my, sit in front of my desk, you got to do something. So I don't necessarily say that's the best course of action, but I'm normally sitting at my desk looking for opportunity, so I tend not to put it in.
Okay, we did just talk Gap before, but Market Picker here has a follow-up saying Gap is not really a momentum stock, but it is holding up well. Does the minor false breakout concern you at all, though?
Gap Stores has been a good chart all year. I got to say, it's moved up from the lower end, almost all the way 20 back to 36, almost a double. So it has run a long way. Could it digest and base for a little bit? And that base, I wouldn't be surprised to see it come back down to, the $30 range, or maybe even a little lower to the 200-day moving average, if the market certainly shows a little weakness. The weekly chart, just so you can see, it's been respecting, since 2012, it's been respecting the 8-day and the 200 and the 21-day moving average. So if it comes back to 32.54, which is obviously the price today, which would be the 21-day, that would be the chance probably to get back involved, something I would look at. We're not there yet. I probably wouldn't do anything right here.
All right, here's one from Stock Giant. ROST, how long can it go and when could be reversal?
The reversal's in the works right now, actually. So if you've been long, you probably should have been out at this point in time, depending on how long ago you were long. It looks like first stop is 60, which is a 200-day moving average. That should be some support, at least temporarily. It doesn't, but it could come down a little further. And this is the weekly all, so this is giving you warning signs that you should have been out probably around 65, maybe 64. But at this point in time, if it's a swing long and you have profits, I certainly would be taking some risk off the board accordingly.
Okay, and as we've talked about, tomorrow is a pretty big day. So where will your focus be tonight heading into tomorrow? Tonight
will be on a Stella. No, on a beer. I need a beer. I'm actually going to Nobu tonight, so rock shrimp, little
very
tuna,
nice. Not bad.
Not bad. But I think the banks. I think the banks. Certainly, Apple's always on my radar. Google's always on my radar. The banks are going to be the focus tomorrow. See if the market can hold in there. That's really the key. Right now, we're trading below some key moving averages, at least on the daily. We're right at some key moving averages on the weekly. We have to see if we hold. This is a nice little consolidated chart, but if we don't hold, we're going to come back down to its 21-day, which again, you're looking at the spiders around 140, which is still a nice little drop, which would probably almost equate to that 10% correction or 7% correction that people want to see, and maybe it happens. And now with the news, obviously you're hearing on all the news channels, the fiscal cliff, the debt ceiling, all these other things are coming into play. Looking for things to talk about, but that could put some overhead in this market. That seems to be happening right now. So I'd just be smart. Can't be all bullish as I was talking about. Looking to buy on pullbacks. You got to be strategic in your thinking. Two-way trading is the way to be right now. Flexibility is the key, certainly.
All right, well, thanks so much, Mark, and thanks to you all for sending in your questions. We'll meet you right back here next Thursday for another StockTwits Q&A. Have a great night.